And the Bitcoin itself is our belief that Bitcoin is the ultimate digital scarcity network. And because Bitcoin has been moving up about 50% a year on average over the last 3 years, the real key with Bitcoin is just to be able to hold on to it and stomach the volatility. And we have conditioned our shareholders and our bondholders to understand that we're long-term hodlers. And because everybody is aligned in that interest, we're able to weather that volatility, and we end up doing very, very well as Bitcoin recovers.
Michael Saylor, the co-founder of MicroStrategy, the public trading company that owns the largest amount of Bitcoins in the world, has been under fire for the past few months for his decisions. When COVID hit the world, he shared his vision of Bitcoin as a solution to help the shareholders and the company profit and maintain its value over time instead of holding fiat currency that, as we all know by now, it's worth less as time goes by. That vision led the company to have 140,000 Bitcoin as of April 5, 2023, at an average purchasing price of $29,800 per Bitcoin, so a total investment of around $4.17 billion. But since the company started holding this asset, we have been in a prolonged bear market that dropped Bitcoin's prices to $15,000, leading to a considerable lack of trust in Michael and a net loss of billions in worth. Now that Bitcoin is recovering to around 29,000, CNBC interviewed Michael Saylor on his current strategy. So let's watch it together and enter Michael's brain to understand his new predictions for BTC.
All right, so let's talk a little bit about earnings, because in your core software business, software licenses revenue climbed 23%, subscription services revenue up 46%, but really the focus from the market, as per usual, since MicroStrategy is the largest publicly traded holder of Bitcoin, is the fact that your impairment loss for Bitcoin was so much smaller than it has been in recent quarters.
So MicroStrategy keeps moving their cash flow from the software profits to Bitcoin, even though they had such quote-unquote losses for so long, by looking at this asset as a long-term safety net. Not only that, but they are still buying the lowest dollar cost averaging their investment to profit more in the future. If we look at Michael's recent tweets, he shared a stock performance chart since MicroStrategy adopted Bitcoin. By applying these strategies, it is the second best performing asset for the company, only losing to their stocks. And when sharing these charts, he even says that diversification is selling the winner to buy the losers. Let's hear what else Michael said in this interview.
That Bitcoin is the ultimate digital scarcity network. And because Bitcoin has been moving up about 50% a year on average over the last 3 years, the real key with Bitcoin is just to be able to hold on to it and stomach the volatility. And we have conditioned our shareholders and our bondholders to understand that we're long-term hodlers. And because everybody is aligned in that interest, we're able to weather that volatility, and we end up doing very, very well as Bitcoin recovers.
Bitcoin apparently is recovering in 2023. Is there a reason for it? Let's hear what Michael has to say.
Right now, there are two twin drivers, right? There's the macroeconomic concern about inflation, and as inflation takes place, people lose confidence in fiat currencies, and that means they start to realize that everything valued on cash flows is a currency derivative, and Bitcoin is not valued on cash flows. It's in a digital scarcity. The failure of the banks, Silvergate Bank, Signature Bank, Silicon Valley Bank, now First Republic Bank, causes people in the Western world to start to lose a little bit of faith in the banking system, and they remember that Bitcoin is a bank in cyberspace run by incorruptible software. So the phrase "be your own bank" has emerged as an investment idea in the United States, but it's really a matter of financial survival elsewhere. And so the combination of that concern about inflation and counterparty risk with banks is driving Bitcoin's adoption. It's also being driven, by the way, by the crypto crackdown. And as people lose faith in crypto exchanges, crypto securities, and cryptocurrencies, there's a natural migration of capital from those crypto ecosystems into Bitcoin, since it's viewed as the risk-off safe haven asset of the crypto space.
It makes sense, right? The banking collapse and the de-debasement of the fiat currency are the perfect triggers and some of the main reasons why Bitcoin was created by Satoshi Nakamoto in 2009 in the first place. If we watch this short clip of an interview he did with Patrick Bet-David a few months ago, we can see that his vision and strategy remain precisely the same.
Bitcoin goes through phases where it's either positively correlated to risk assets, or is negatively correlated, or is uncorrelated, and it all comes down to the micro dynamics, like how are all the exchanges and all the other crypto traders, how are they behaving? And then the macro traders, how are the macro traders perceiving it? And that's continually evolving. Let me give you one interesting stat. Like on August 10th, MicroStrategy decided to get into this business. So August 10th, 2020. So if you go back to the summer of 2020, when it was just unclear, what are all these assets going to do?
You said August 10th?
August 10th. So I track this because this is my scorecard, because on August 11th, we announced we bought $250 million worth of Bitcoin, and we've been long Bitcoin ever since. If you had taken $1 billion and you had bought bonds, like long bonds, 20-year bonds in the summer of 2020 and held them through today, you would be down 19%.
8 to 10.
19. The BOND index is minus 19%.
That's what I'm saying. $1 billion will be $810 million.
Yeah, if you bought gold, you'd be down 13%.
Okay.
If you had bought the NASDAQ, you would be up 3%. It pretty much chopped.
Sure.
Right? If you had bought the S&P index, you would be up 19%. Not bad.
Not bad, sure.
Not bad. If you had bought Bitcoin, you'd be up 43%. Bitcoin doubled the performance of those other assets, even as it got beat around the ears. And if you had gone into big tech and you bought Google, you'd be up 34%. Not as good as Bitcoin, but better than NASDAQ. Apple's up 30%. Microsoft is up about 20%. So those three are monopolies, the three most powerful tech monopolies in the world. But Netflix down 34%, Amazon down 42%, and Facebook/Meta down 54%. Bitcoin is really volatile, no doubt about it. It's hair on fire. But if you're going to be an investor for less than 12 months, you are just a speculator and you're a trader. And God bless you. If you go short, you make some money if you pick it right. But if you pick wrong, you get your face ripped off. And I don't know how to do that. I mean, you have to be a trader. But if your time horizon is 4 years, 2 years, 4 years, 8 years beyond, and if you're buying it as a long-term store of value asset, and are you disgusted with the manipulation of the fiat currency? Then you buy Bitcoin because you're angry that they keep printing more pesos and bolivars and dollars and euros. Are you disgusted that the CEO of your favorite company screwed you by making bad decisions? I won't name the company, fill in your own. Then you're going to buy Bitcoin. There's no CEO of Bitcoin. Yeah. Are you, so if you want to escape that particular risk, and what you want to do is you don't want to trust a CEO, a company, a government, or anybody. And if you want to buy something that you can hold for 30 years, well, I can tell you, I can't pick a single company that I would want to hold 30 years. I can't, there's not a piece of land I would hold for 30 years because I don't know that the mayor wouldn't, the guy that replaces the mayor next might decide to triple the property tax. And, so there are a lot of things in this world that are just very risky. Bitcoin fits in a portfolio and it's performing just fine as long as you have a 2-year plus time horizon. And if you have a short time horizon, if you want to look at 12 weeks, 18 weeks, 1 year, every single investment in the last 12 months looks pretty hideous.
Independently of what's happening to the markets, Michael keeps buying and holding Bitcoin as a store of value with his eyes on the future. On the other side, we see people like Gareth Soloway, which we bring almost daily to the channel, trading it constantly. So what are you doing now? Are you just average dollar costing and holding Bitcoin? Or are you trading it and looking for long or short opportunities every month? Let us know in the comments below. And if you want to see more curated daily crypto content like this, please leave a like and subscribe. Thanks.